Hello and welcome to another update video about ADA Cardano. So we have broken out of this descending channel that has bullish implications. It is, however, way too early to confirm a significant bear market low. However, there are a few things that are really positive for ADA. First of all, if you remember what we talked about, that the 88.7% Fibonacci retracement level for ADA is around the 29.30 cent mark. Now we've broken back above it. That is a significant sign. However, not unexpected because, if you remember what we talked about before, this current move up could be substantial. Even in a scenario where we are tracking here a wave 2 correction, that we say we came down off this high in a wave 1, we're looking at a wave 2 correction and it would come down further afterwards. So only the fact that we broke out of this channel doesn't really indicate the low is in. However, as I said to you, we're tracking this stuff and I'm going to track impulses. These can of course be used for trading. But at the moment there is no evidence that the bear market low is in, but we are tracking important movements, and certainly the low could be in. So I've stressed that basically in every video, that every low could now be the bear market low. And in the end, you need to decide for yourself if you're waiting for additional lows or if you're waiting for a confirmed low. And if you wait for a confirmed low, it means we need to have a larger structure, 5 waves up, 3 waves down. And then you're probably losing out on whatever, maybe 20, 30, 40, 50% of profit off the low. But at least you have the confidence that the bear market low has been made. And of course, I can't make that call lightly. We need real confirmation because we have responsibility as well. And it's a channel that is based on objectivity and not too much speculation. Of course, there's speculation as well, and we have to make assumptions. But if I confirm a bear market low, we need some serious evidence, right? So yeah, that's sort of what you need to know. Overall, of course, we are still largely in an accumulation phase for all coins, for all altcoins. But in my opinion, this is still not enough to confirm that we have ended here a bear market or anything. It is very easy to get bullish when we see a few green candles. And to be fair, ADA is showing some signs of life, which makes me very happy. By the way, if you want to support MCO and want to earn some passive ADA, feel free to delegate your ADA to our MCO stake pool. It's still a fairly new pool, but we have been distributing rewards for the last three or four epochs, which other pools take months for. So if you're interested in delegating your ADA to our stake pool, feel free to check out the links in the video description. But yeah, let's see where we are. I mean, if this really is still a wave 2 correction, then we could easily go all the way up to 39.8 cents. I must say though, that is getting less likely now, at least in this particular structure. And the reason for that is that if this seems to become an impulse, a full impulse. So I will have difficulties to say this is still an A wave. We're then going to come down in B and we will move up in C, because that would exceed the wave 4 high easily now. So, I mean, we were aware this could all go up to possibly around 40 cents or whatever. But yeah, I did expect it to be in a 3-wave move. So the fact it's not in a 3-wave move, at least not at the moment, indicates something more bullish could be going on here. So I'm going to tell you all the levels that now need to be held, that the price needs to hold in order to complete with the development of a further impulse. If we break down from here, then it could still be an A with a move down expected in a B wave and then a move up in C. We have to track both at the moment because the market has broken out of the channel, which again was also expected in this ABC move. However, the length of what would be an A wave is quite strong. Okay, so yeah, maybe something more bullish is going on, but we need to be very careful. We had many fake lows in this bear market. Okay, so what is the pattern? So at the moment, I'm seeing here a possible 5-wave move up still emerging. This looks like a 3rd wave, which is why I pushed this 3rd wave up now, which means a 4th and a 5th could still be coming. So there is another way of counting this. I want to make you aware of that as well, because we could say that we had, and that would be a different kind of way of counting. It's not a very likely one. We would have a 1-2 here that was down here basically in the beginning. Actually, the wave 1 did sit here. Then the wave 3 would have been here, and we would have a wave 4 triangle, and the wave 5 was simply very long. I find that rather unlikely, but that would be a scenario where we still have here the wave A as a likely option, then come down in B, move up in C, and then we will break down afterwards to make a new low. If we push considerably higher now, that would be a really good indication that an overall bear market low has been made. But again, not really a confirmation yet. We need to be very careful. So however, how would this move work out? So let me show that. This could still push higher if we, let me move the ABC out of the way and just readjust the count here to show you what, just need to think here, 1, 2. So basically we had a wave 1 in this scenario as a leading diagonal, the wave 2 down afterwards. The wave 3 would probably still be ongoing. This is now pretty much in line with the Ethereum count. Yeah. So here we then say that in this wave 3 we had another 1, 2, and I'm going to change the wave degree in a minute. 1, 2. Probably the wave 3 is still ongoing. There will be a 4th and a 5th. So actually I move that higher. This would be a very bullish interpretation. And I think it's important at the moment to be aware of these, and then just to be aware of the key levels that would invalidate each of these if you think about continuing to trade this. But this count would suggest this has still the potential to push higher as long as certain conditions are met. And we had a small 1, 2 here. This would be a 3, 4, 5. And give me a sec to adjust all this. And here you can see very nicely that if we have an impulse ongoing, and this will be, you know, in the bull market, this will be the daily business, right? Micro counting to adjust, especially if we are in a trend reversal, like we are possibly here with ADA, because these impulses can always continue higher and stretch out further. So, which is why it's so important to consider not taking profits too early, you know, move up your stop losses, use other methods of identifying if a trend is broken, for example, fib levels, like we are doing here in these videos. Okay, so if we assume this was a wave 3, we're now coming down in 4. I would prefer this wave 4 to be over now because we are currently finding support at this descending trend line of the channel that I showed you. So ideally we're just doing a retest here and we'll move up higher in a wave 5. What would be a possible target? So first of all, if we now look at retracements, how far should the wave 4 really, or is the wave 4 allowed to drop? So it could still technically drop to the 31-cent level. So I'm going to give you here an area where the price should ideally turn around, obviously between now and the 50% retracement. If we drop now below 31 cents, it wouldn't be good for this scenario. It would rather include, or it would rather point to the previous scenario I showed you, where we could say that the wave 1 was already finished, or the wave A, yeah, that this impulse is finished and will then break down. So important is here the 31-cent level. That's basically the make or break point. If we continue and find support here, then we can push higher in a 5th wave. The target for this 5th wave, the most convenient way of calculating that would be to take the length of the 3rd wave here, go to the low of the 4th. Now I don't have a confirmed low yet, but let's just assume the low is here at the 38.2 retracement at 31.8 cents. Then it could still push to 36.29 cents. Let's see if this is actually going to do it. That would be this wave 3 high, then a wave 4 down, and a wave 5 up. So bear in mind, this market is now getting overheated. Yeah, overbought, but as I said already in the previous video, we were overbought already, but we didn't see any bearish divergence yet. So there's still the potential to push higher. And if we look on the daily chart, we are now overbought as well. Yeah, so it's a bit of a warning. It's not a signal that we're coming down. Purely means at the moment that we are, you know, in an uptrend. At the moment, the move down looks corrective, but just be prepared to move up your stop losses, you know, and that you don't miss out on taking partial profits or something, depending on how you trade. Everybody's got a different way of trading, different time frames, and so on. But this is the next area where we could still push higher from if we stay above the 31-cent level. Breaking below that would just put a lot of doubt on this scenario. Bear in mind, here in this scenario, we already have 1, 2, 1, 2, and 1, 2. Having 3 1, 2 setups in a row always, you know, if we have 4, it will get very unrealistic. With 3, it's still acceptable. 4 would be really bullish. That's why I showed you the alternative pattern as well. So it's very important to consider here keeping a tight stop loss and having your risk management in place, because we are still not in a situation where we can say, yeah, we've definitely found a bear market low. The next retracement, the larger retracement, yeah, I mean, when this impulse is finished, and it doesn't necessarily need to go that high, right? It's now overheated. But if those support levels are holding that I'm going to give you, then this is obviously going to follow the count. And if we then get the first larger retracement, that will be the moment of truth, because at some point you'll get that massive profit taking, that large retracement that nobody wants to hear when we have green candles, but it happens time and time again. I've seen it too many times. You will always crash down again. And even if it's only a higher low and we come down to take, you know, just for profit taking, it will take off then. You will always come down, and there's hundreds and thousands of new entry areas every day and trading opportunities. So there's no reason here to first of all get too excited, because that's emotions, and that is never good for trading and investing as well. And you know, if it turns around, and if this seriously was the bear market low, what now many people talk about again, funny enough, even though I mean, we've been in this price range like in December and nobody talked about that. So suddenly everybody gets bullish, but I would advise against getting too bullish here. We had those rallies before. Even if the low is in, we should all be happy, right? We should all be happy, because then it will go up to $3, $4, $5. So, you know, there's plenty of time to get in should the low already be in. And be aware that it's never possible to pick the absolute low, because you always need a signal if the trend changes. You know, there is just no way, even in fundamental or technical analysis, to say when we come down here, the low is in now. That's why I point out every time we make a new low, we are in a larger accumulation phase. Every low could be the last one, but without a signal, we can't say, right? And that's the signal here that might be developing. So we're tracking this, and as soon as we have confidence that the bear market low is in, I would of course make you aware. So quite a long video actually. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.